What's up, everyone? It's Gabby Trades here, and welcome back to the channel. If you ever wanted a way to automate your trading without being glued to the charts 24/7, Gridbots might be exactly what you're looking for. And this is what I'm going to show you today. But before we get rolling, don't forget to smash that like button, subscribe if you're new here, hit the small bell notification so you never miss a breakdown. Now, I want to walk you through exactly what Gridbots are and how they work, and I want to show you step by step how you can set up one for yourself on Pionex so you can start testing it out for yourself. And here's the cool part, you guys. If you use the link in the description box to sign up, Pionex is offering some really cool bonuses right now. You will get 50 USDT bonus just for registering and completing KYC2, and 100 USDT bonus when you open your first futures grid with at least $100 and keep it running for 7 days. The small print, of course. Plus, you get up to 1,000 USDT in deposit bonuses, depending on how much you deposit, obviously. Now, not only that, but most importantly, by signing up through my link, this is going to give you access to the VIP private Discord community where we talk setups, share insights, and I post my daily updates, you guys, which is very important for you to be there, especially when I'm away. So let's get straight into it. All right, you guys. So first things first, what's a Pionex grid bot? Well, it is honestly as simple as automating a process of buy low and sell high inside a price range that you determine, because you are going to tell the bot, this is the top and this is the bottom of my range, and this is how many grid levels I would like to use. So the bot is going to place the buy orders as price falls and sells those positions as price rises, capturing many small profits. And because the orders are going to be spread out, you can use controlled leverage, which means making money while price is sideways and really just avoiding emotional mistakes like panic selling or really FOMOing. Now, how the grid bot actually works? Well, pretty simple. The core idea is you have a split price range into lots of levels, which are essentially going to be our grids. So each grid has a buy level and a sell level. So when price hits a buy level, the bot is going to buy, and when price later returns up to the sell level, the bot is going to sell and realize a profit. Now, in terms of the order book deployment, the bot is going to deploy a portion of your funds into limit orders across the grid and keep some funds reserved as liquidity buffer to buy further on the dips. So you can see exactly how much you've deployed versus reserved, and that's in the user phase. And you will have two profit buckets, really. And one is going to be the grid profit. That means realized profit from completed buy sell cycles. And it's really locked in profit, you guys. And then the unrealized profit is going to mean paper P&L from current open positions that haven't been closed yet. So it's important we understand the difference. So now, why are we using a bot instead of just holding our manual trades? Well, obviously because it neutralizes emotions to some extent. So most people don't buy at lows or sell at highs. Why? Well, because they panics. But bots do it super consistently. So you guys look at this. For example, honestly, just open your exchange that you place manual trades on and just look at the chart. Look at the chart and see how many times you've actually bought at the bottom but actually didn't sell at the high where you were supposed to and you sold earlier because you panicked, right? So think about it. Also, the bot is very cool because we know that the market is ranging 70% of the times, right? So imagine, remember, we used to have Bitcoin for range for so many months. Now, think about it. If price ranges for months, the bot is going to keep collecting profits where the hodling is not going to, which is very, very efficient. And then, of course, you're going to have controlled leverage. So rather going all in because you feel like it, the bot is going to spread the entries across the range, and that's going to allow leverage with constrained risk. And you compare that to one big leverage trade, and you can see very quickly how that is better. So, how do we set up a basic grid? Well, that's very, very simple. So, first of all, we have to pick our pair, right? So, let's say big caps, Bitcoin, Ethereum, Solana, um, and then we have to decide our direction, right? We have to decide whether we're long for bull markets as a default or whether we're short for bear markets. We also have a neutral option, but that's rarely necessary. So we're only going to look at the long and the short ones over here. Second of all, we have to, or that's third actually, that we have to define our price range. That means the top and the bottom. So we're choosing a range where price has been oscillating, for example. So think support and resistance. And you know how much of that I do tend to utilize on my charts. So, for example, when I see a range low and a range high, and I'm like, oh my God, here is where price should hold. Otherwise, price is going to drop a little bit more or a lot more. That's where I want to be positioned to start buying, for example. And then what I'm going to do next is I'm going to select the number of grids. So more grids is going to mean more frequent small profits. Lesser grids or fewer grids is going to mean wider spacing and less frequent trading. So a lot of people, I don't know, have 100 as a common default, but I, for example, like to put 200 grids as an example. Then what you want to be doing is you want to be setting the investment size and leverage. So for example, I started testing the bot using 3x leverage. To be fair, I wish I put a little bit more leverage. So now I will be using a lot more. So for example, I'm going to use the lower leverage like 3 to 5x for like altcoins and stuff like that. But if I'm trading Bitcoin, I feel I can use up to 10x. But if I use more than that, I feel it's going to be a little bit more risky than I would like it to because the ranges can be quite big. So then obviously you create the bot, you review the deployment, you check the percentages deployed versus whatever you guys have in your reserves, and then you confirm the grid profit. And then you would see immediately executed. You can also do a limit order and all these things. Now, so the thing is, it's important that you monitor the bot, but you don't need to micromanage it like a position, right? This is why this is a good additional thing that we can use to our trading. It's very, very helpful. If you want to start safer, you guys obviously think about how much capital you want to deploy. Like me personally, I use 1%, but now that I'm more confident in my bots, like I can try 2% or whatever you guys feel comfortable with. All right, so what do we do if the bot breaks away from our defined range? So we can, first of all, we can wait. Like if we believe that price is going to return in the range, I'm going to keep the bot running, and then I'm going to be expecting for price to recover. But then option two is going to be for me to adjust the range lower, meaning to widen the grid downwards and preserve a little bit of a buffer. Or of course, you would have the option three, which is to close and to realize a loss if you don't want any more exposure. So, same thing. For example, break up, if it surges above the top, and then often you'll have realized profits. So bot has closed the position and is going to be sitting in cash. So you can leave it, adjust the upper bound, or create a new bot in the new range. So the thing that we kind of don't want to do is opening a bot randomly, right? We don't want to open a bot randomly without having an idea of a range high and a range low. So we need to have a visual understanding of what exactly we want to do. The second thing we want to avoid is using too much leverage. We can't go 100x, in my opinion. That's crazy. For Bitcoin, like I said, I can do 10x potentially for only if you actually have experience. Otherwise, it's also too risky. For altcoins, definitely way less, just like I said. And always check the liquidation price, you guys. Now, another thing I wouldn't do is deploy all my capital upon creation. So let's say set the range. So initial deploy portion is small, but then keeping the reserves to buy, right? Keep funds as reserves to buy the dips. Now, another thing you want to avoid is forget that the bot exists. Obviously, I always check it. I think once a day for me, it's quite nice to check the bots. And yeah, Pionex is going to show you all the trades, the actual history, and transparency is important. All right, you guys, so hope that was useful, and make sure to check the description box again, like this video if you haven't already, and I'll see you guys in the next one.